Welcome to the class. My name is Abu Bakr, and I will be teaching you financial management, a skill level paper of ACCA. So the subject we have is a financial management, and obviously this is our first class. So first of all, we will be having introduction of the paper. We will discuss the course plan. We will discuss the exam pattern, and then we will start the first topic of this paper. So first of all, if kindly introduce yourself, all the students out there. Basically, I want to know that all of you are from an ACCA stream, or some of you are from exemption group. You know that ACCA provides exemption on certain qualification. If anyone is not coming directly from ACCA, kindly let me know. Anyone? All of you are from ACCA?
Yes.
Okay, okay. Then that's good. Then that will be easy for us. Okay. So let's start the class paper. We have financial management. What is financial management? Financial management is basically concerned about the financial matters of an organization. And we have different types of organization. We have profit-making organization, commercial organization, and we have not-for-profit making organization. The main focus of this paper is on commercial organizations, which have the objective of profit making. And in financial management, we take care of their financial matters. Like, for example, we take care of their sources of finance. If they need funds, how those funds will be generated, whether company will issue equity, whether the company will issue preference share, whether company will raise the debt, whether we go for long-term debt, whether we will go for short-term debt. Such matters we will take care in financial management. We plan the cash forecast. We take care of the management of working capital, and we also look after the risk management strategies relating to financial management. So the financial management paper, which we are going to study, is basically about the financial matters of an organization. Okay, that is the main objective of this subject. If we talk about the any paper which may create basis of this paper of financial management in ACCA, we have no any direct paper which we can say that create a base in ACCA for financial management. Like for financial reporting, we have financial accounting in foundation level. But for financial management, we does not have any basic subject in ACCA. So this financial management, paper of financial management, we are going to study first time. Yes, we have certain topics which we will discuss in financial management. We may have discussed in some earlier studies, like in management and cost accounting, in performance management accounting, we may have covered certain areas of financial management, but as a subject, we does not have any basic subject in ACCA regarding the financial management. Okay, so That is the definition, you can say the main objective, main scope of the study of financial management. Now, first of all, after that, we will discuss the exam pattern before we will go for the proper discussion of financial management. Dear student, uh, the paper of financial management will be the computer-based exam. We call CB exam, computer-based exam. Financial management will be a computer-based exam. And this exam will be of 100 marks, will be of 100 marks. Now, in computer-based exam, we have 3 sections. These 100 marks will be divided in 3 sections. First section is known as section A, or you can say is known as part A. In part A, we will be having 15 OT questions. We will be having 15 OT questions. And each question will be consist of 2 marks. So that means 15 questions. Each question is of 2 marks. So we have 30 marks in section A. And OT question stand for objective test question. OT stand for objective test. Now, what is the meaning of objective test? That means in this area, the question which will be tested will be in the form of objective type question. That means it will be consist of MCQs. It may be consist of filling the blanks. It may be consist of true and false statements. Maybe you have matching box. Okay. So OT question, objective question. You will be having 15 objective questions in a section A of financial management paper, and the total marks will be 30 marks. Then after the section A, the next section, the next part of the computer-based exam of financial management will be the section B, part B. In part B, we will be having 3 objective test case studies. 3 OT case studies. As I told you, OT mean objective test question. Now, what is meaning of case study? Now, you all have an experience of ACCA foundation, where obviously you have attempted the financial accounting paper. In financial accounting paper, you have multiple task questions, which is known as MTQs, multiple task question. Now, if you remember, in multiple task question, you people were given with a small case study with some details. And then on that case study, you have some MCQs or you have some filling the blanks, or you may have true and false statement. Now, in financial management, the multiple task questions are known as objective test case study. These are similar to the multiple task question. The student will be given with the case study, and on that case study, you will be having, on each given case study, you will be having 5 OT questions. Each case study will be consist of 5 objective test questions. And each OT case study will be consist of 10 marks. Each OT case study will be consist of 10 marks. So you have 3 OT case study. Each OT case study is having 10 marks. So the section B will also having total 30 marks in your exam. So we can say that very effectively, your 60% of your exam, 60% of your exam will be objective test exam or objective based question. Will be consist of objective based questions, 60% of your exam, 30% in section A and 30% in section B. Then after the section B, there will be part C. There will be the section C of the exam. Now in a part C, we will be having 2 constructive response questions, constructive response question. Now, what is the meaning of constructive response question? And among you who has or have attempted the performance management paper of ACCA PM paper, they would have the idea about the constructive response question. Basically, the constructive response question means you will be given with a proper question for which you have to construct the answer. You have to construct the answer, maybe using the spreadsheet, which is also known as Excel, or you may be using the Word format, MS Office, to construct the answer. And in a part C, each question will be consist of 20 marks. And 2 into 20, there will be 40 marks available in section C. So that is how your paper will be constructed of section A, section B, and section C, and 40 and 16 section A and B and 14 section C. So you will be having total 100 marks in your FM computer based exam, and time available will be 3 hours and 15 minutes. And you need to get, first of all, 50 marks, 50% at least, to pass this paper. So that will be the exam structure or exam pattern of financial management. Now, one more thing regarding the exam structure. I have discussed verbally the paper pattern, but let me show you that how actually it will be appearing in your exam. Let me open the exam sheet. Now, this is the live exam screen. Okay, you are looking at your screen. As I told you, first of all, you will be having section A, and the section A will be consist of 15 objective test questions. And each question will be consist of 2 marks. Now, that would be the style of objective test question. Like here we have filling the blank, a question from financial management topic, and that is, that is multiple choice question, MCQ. You have to choose the right option. You will choose your option, and then you will move to the next. And again, another objective test question. And that is again a multiple choice question. You are given with the 4 choices and you have to choose the right choice. Then question number 3, that is some sort of matching. You have to replace the boxes in the right area. Objective test question. Again, MCQ. Again, multiple choice. Again, multiple choice. Again, multiple choice. Filling the blank. Okay. So that would be the style of objective test question. It is similar style which we have in foundation level. Okay. These 30% marks will be almost in a similar pattern, similar style, which we have in ACCA foundation level. But obviously the difficulty level, the subject is different, but the exam pattern of section A is almost similar to foundation level. Then after the section A, we have a section B, and the section B will be consist of 3 objective test case studies. As I told you, objective test case studies are similar to multiple task questions. Are similar to multiple task questions which we have in foundation level paper of financial accounting or management accounting. Now, look at your screen. This is the first objective test case study. On the left side of your screen, you are having a case study. Basically, this is the question. The question name is Power Company. And this power company will be having 5 objective questions. Will be having 5 objective questions. And each question will be consist of 2 marks. So in each OT case study, you have 5 questions and each question is consist of 2 marks. So each objective case study will be consist of 10 marks. Will be consist of 10 marks. Like this objective case study has a question number 1. The loan note are secured on a non-grant and the requirement is arrange the following sources of finance of a power company in order of risk to the investor. To the investor. Okay, we will choose the right option and then we will move to next. Now, in the next question, look at the left side of your screen. The same case study, and now you have the second question of the first OT case study. That is filling the blanks. Then you will having question number 3 of OT case study of first OT case study, question number 3. Then you having question number 4 of first OT case studies. Look at the left side of your screen, power company, and you have another objective test question of relating objective case study. And then the question number 5. This is the last question of first OT case study. Now, when you attempt this question and you will press the next. Now, from here, the second OT case study will be started. And again, this OT case study will also be consist of 10 OT questions, 10 objective test questions. And you will be having the 10 marks. And in section B, you will be having total 3 marks, 3 objective test case studies. And each objective test case study will be consist of 5 individual OT questions. That will make total 10 marks of each OT case study. And you will be having in the section B 3 OT case studies, so you will be having 30 marks. After completing the section B, you will be having section C. Section C. Now, in a section C, we will be having a constructive response question. Like on the left side of your screen, you have a question. You have a question. And this is the first requirement of this question. Calculate the following values for investment proposal. NPV, internal rate of return, return on capital employed. 5, 3, and 3. You are having total 11 marks for the first part of the first constructive response question. And look that you are given with the Excel sheet. This question has already been solved, but this is Excel sheet. This Excel sheet will be given and you will solve this question. This is the first part of the constructive response question. After completing it, you will move to the next. And this is the second part of the first question, which requires briefly discuss your finding in each of the section A. Now here you need to discuss, so you are given with the word format. Then you will be having the part C of the first objective test, first constructive response question. Part C of first constructive response question. And that is the last part of the first constructive response question. Again, here requirement is discussed. how the objective of VIP company stakeholder may be in conflict if the project is undertaken. 5 marks, and you are having total 20 marks for the first question. And again, you are given with the word format to explain, to discuss the requirement, So this is the first constructive response question. And then you will be given another constructive response question. And that constructive response question will also be consist of 20 marks. So you will be having total 40 marks in a section C. And that's how you will make total 100 marks in your FM paper. And we need at least 50% to pass this paper, So that is your exam pattern, or you can say computer-based exam pattern, which we will be having in our final exam. Any question? Okay. Now, moving forward, now we need to discuss the course plan. Okay, this is the course plan. Now, we will discuss the course plan, the topics, the areas, the concepts, which we will study in financial management paper. We have discussed the exam pattern. Now we are going to discuss the course plan, the topics, the areas which we are going to study in financial management. Now, as I discussed earlier, that when we say they say financial management, the financial management is basically concerned about or deal with the financial matters of an organization. And as I discussed, we have profitable organization, we have not-for-profit making organization, but the main objective of financial management paper, which we are going to study, is regarding the profit making entity. So mainly we will be discussing the financial matters of commercial organization. The organization whose objective is to make profit, And when we will be dealing with the financial matter of a company, being a financial manager, we will be taking some decisions. We will be taking decision like investment decisions, long-term investment decision, whether we should start a new factory, new business, new project. Investment decision, we will be dealing with the financing decisions of the company. First, we will deal with the investment decision, then we will deal with the financing decision. Financing means if we are going to start a business and we need millions of dollars, how those millions of dollars will be raised or will be gathered to start the business, financing decision. And the third thing which we are concerned about especially is dividend decision. Dividend decision, that how much dividend should have been paid by the company. So in financial management, we will be taking investment, financing, and dividend decision. And for what entities? For profit-making entities. And when we will be taking the decision of investment and financing and dividend relating to profit-making entities, the objective with which we will take the decision, the main objective will be maximization of shareholder wealth. Our main objective will be the maximization of shareholder wealth. Maximization of shareholder wealth will be our objective. For example, if I am taking an investment decision, then decision will be taken if the income from the investment is greater than or more than the cost of the business. Then I am making the wealth more for my shareholder. I am maximizing the wealth for my shareholder. Now, for example, if we talk about financing decision, to start a business, we need funds. Now, when we need funds, every fund which we invest in a business has a cost, in a form of cost of equity, in a form of interest, in a form of cost of debt. So, while making the financing decision, we will try to keep those costs low. And when I will keep the financing cost low, so basically I will be maximizing the shareholder wealth. And regarding the dividend, dividend has a direct link with the retained earnings of the company. If company pay more dividend, they will left with less retained earnings. And that would be difficult for the company to making future investment. And if they pay no dividend or pay low dividend, obviously they will be retaining more profit in the company to make future invest, but this policy may disturb the shareholder. So while making the dividend policy, we need to keep the dividend balance. We should not pay too much dividend and we should not pay very low dividend. So in financial management, I will be taking investment, financing, and dividend decision for profit-making organization. And the main objective to make such decision would be to maximize the shareholder wealth. Maximize the shareholder wealth. Now, after this brief definition and brief function of financial management, now let's start to discuss the course plan of paper. Now, the financial management paper or course have been divided in different grades. The first grade is about investment appraisal. Investment appraisal is about investment decisions. that whether a company should make investment or whether the company should not make an investment. That decision is basically known as investment appraisal. Now, in this grade, we will discuss capital budgeting. We will discuss payback period. We will discuss accounting rate of return. We will talk about discounting, compounding, discounted payback, NPV, IRR, annuity, perpetuity. We will talk about risk and uncertainty in the investment appraisal. We will discuss a topic which is named as capital rationing. We will talk about equivalent annual cost. We will talk about lease or buy decision. These topics we will cover in investment appraisal. And after covering these topics, then obviously we will conduct the practice session as well. And after completing this grid with practice session, we will be taking a test number 1. We'll be taking the test 1. And whenever I will take a test, in that test, we will test the section A, we will test the section B, and we will also test the section C of the exam. Then after that, investment grade, the next grade we have is about the financing of the business. It is also known as source of finance. In this grade, we basically discuss that what sources of finances are available for entities and what are the advantages and disadvantages of each source of finance. And in this grade, we also learn to calculate the cost of capital. We will also learn to calculate the cost of capital in this grade. So in this grade, we will be covering cost of equity, which include dividend valuation model, CAPM, capital asset pricing model. We will be discussing to calculate the cost of debt, WACC, risk-adjusted WACC. We will be studying source of finance theory. So these will be the topics in a second grade, which is known as source of finance. After that, the next grade will be about business valuation. In business valuation, we will learn to calculate the value of company and the value of various instruments of the company, like debt, equity, preference. That grade is known as business valuation, how to value a business. And after that, we will be having working capital management. Working capital means current assets minus current liability. So here we will be learning how to manage trade receivable, how to manage inventories, how to manage trade payables, how to manage inventory, trade receivable, payable, how to manage cash. These topics we will be covering in our working capital management. Then we will be having test 3. And after the test 3, the next grade will be on risk management. In this area of risk management, we will be talking about 2 types of risk. Number 1, foreign currency risk. And number 2, interest rate. Foreign currency risk means fluctuation in the profitability of the company and cash flows of the company due to change in exchange rate. That risk is known as foreign currency risk. And we will learn how to manage this foreign currency risk in financial management. And after that, we will discuss the interest rate risk management. Interest rate risk management means volatility in profitability of the business or cash flows of the business due to change in interest rate. Due to change in interest rate. That will be known as interest rate risk management. So these two specific type of risk management we will study in risk management area. Then we have some independent chapters like introduction of financial market and financial institution and macroeconomic environment. These are some separate topics which we will be covering, and then we will be having the final test number 4. So this is the practical course plan, or you can say the syllabus, which we will try to cover in a given number of lectures. But keep in mind, this is a, you can say, a proposed plan. The actual number of lecture may be more than number of lecture which we have seen, or we can see in this course plan. According to this course plan, we are having total 17 lectures, but it will take more than 7. It will take more than 70 because we have to do practice session. We have to discuss the topic in depth with great detail, so the concept can be clear. So due to the pace of the lecture, due to the practice sessions, due to the test, the number of lecture may exceed as compared to the proposed number of lectures. So actual lectures may be 20 or 21 or maybe 22, but according to the plan, we have planned this course in 17 lectures. So this is the course plan, the syllabus area, which we will be completing or we will be studying in this class, Got it? Now, a very important thing. I discussed with you the exam pattern. Now, dear student, the section C of your exam, let me tell you one thing. The section C, where you will be having 2 constructive response questions, that section C will be from these 3 areas. Those 2 questions will be from investment appraisal, business finance, and working capital. Okay. The business valuation area of business valuation, the area of risk management, and the independent areas about financial markets and macroeconomic environment. These topics usually will be tested in section A and section B. But in section C, you will be tested with investment appraisal, business finance, and working capital management. Any question till now, student, regarding the course plan or the exam pattern of the financial management? Do you have any question? Yes, student.
No questions.
Okay. Everyone? Okay, now we have discussed the paper pattern, we have discussed the course plan. Now, let's talk about the study resources. That what study resources we will be using. Dear student, we have multiple study resources. We have notes, class notes, which we can use to revise the topic. We will be having class notes. Number 2, we will be having ACCA Study Hub. Do you know or do you have any information about ACCA Study Hub? Are you familiar with this? Historically, ACCA was not involved in publication of books. They have they were having the approved publication like Kaplan and BPP. But from last 2 years, now ACCA has its own study material. And this study material is free of cost. Free of cost. And ACCA encourage students or recommend students to use their study resource in order to get good marks in the final exam. And this ACCA Study Hub is available on my ACCA. If you access your my ACCA, you will find there ACCA Study Hub. And in that ACCA Study Hub, you have all books available regarding the ACCA. And among those books, we have a book of financial management and exam kit of financial management. So we will be also using ACCA Study Hub. Okay, but keep in mind, this ACCA Study Hub is not available in a book form, in a paper book form. It is available only in electronic form. And you need internet to access that book. Those books are not even downloadable. You cannot download the book. So you have to, if you need to study that book, you have to access the ACCA Study Hub through my ACCA account. Other than that, if you want to use any book to revise the topic other than notes and ACCA Study Hub, I would recommend that you should use Kaplan Study Text. I will share the book. I will share the book, but you can easily download this book using the Google. If you write the Google, you write in a Google that you need a Kaplan book for FM, you can download it very easily. And even if you found 2021-22 version of financial management, that is still applicable. There is no change in a financial management paper. The old version of the book is still relevant for this paper. So these will be our study resources which we will be using to study, to learn the financial management or the topic of the financial management. And just let me show you the ACCA Study Hub. Okay, this is ACC Study Hub, and this is a book of financial management. Okay, and all the topics are available here. You have a book, chapters, you have flashcard for vision, you have quizzes, you have practice questions. It is a complete package. And being a tutor, I highly recommend that you should use ACCA Study Hub. And if you are not feel easy to study from laptop, electronic books, then the second option which you have is a Kaplan study text. You have a second option, Kaplan study text. Okay. But being a tutor, my recommendation is that for study purpose, you should use ACCA study. That would be a very helpful for you people to pass the financial management paper. Okay. So that was the quick introduction of the exam, course plan, and about the study resources which we will be using in this journey of financial management. Now we will start the class, and the sequence of the class will be as per the study plan. As per the study plan. It will be as per the sequence of study plan. So we are going to start this class from investment appraisal. But let me tell you, when I say the investment appraisal, that means number of chapters we need to cover. And let me highlight those chapters which we are going to cover in this investment appraisal grade. And I am highlighting these areas from ACCA Study Hub. But these are in a similar way are available in a Kaplan. For investment appraisal grade, we have chapter number 3, which we will be doing. We will be having chapter number 4. We have chapter number 5, chapter number 6, and chapter number 7. So chapter 3 to chapter 7 is basically covering the grid of investment appraisal. Okay. So when I say the investment appraisal grid, then it means I am talking about 4 to 5 chapters, which we are going to cover. And this investment appraisal grid will be covering 20 to 25% of your exam. 20 to 25% of your exam will be covered from investment appraisal grid, which is covered in 5 chapters, from chapter number 3 to chapter number 7. And we are going to start the FM from investment appraisal. From investment appraisal. Okay? And we will start today. But before I start the class, I will take a break for 5 minutes. Okay? Just for 5 minutes, I will take a break. And after that, we will start the first topic of the financial management, which is from investment appraisal. So kindly take a quick break. Okay, welcome back. So let's start. We are going to start financial management from investment appraisal. Now, what is investment appraisal? If we define the investment appraisal, basically it's a process to evaluate the available investment opportunities. The process to evaluate available investment opportunities is basically known as investment appraisal. And when we say the available investment opportunity, that means we are talking about capital expenditure. We are talking about capital expenditure. Like, for example, to start a new factory or to invest in a long-term or non-current asset. Such investment opportunities are evaluated using the investment appraisal process. Now, dear students, as all of you will be aware of that we have two types of expenditure. The first type of expenditure we have is revenue expenditure. And the other is capital expenditure. Now, the main difference between revenue expenditure and capital expenditure is that in revenue expenditure, when we incur the expense, we simultaneously we receive the benefit as well. Okay. And in a capital expenditure, we incurred expense today, but the benefit we will get over the number of coming years, So in revenue expenditure, you incurred the expense of $10, you incurred the cost, and at the same time, you get the benefit as well. Like you use the electricity, you incurred the cost, you get the benefit. That is an example of revenue expenditure. Now, in revenue expenditure, there is no time difference between incurring the expense and getting the benefit. So we do not apply mind too much to decide that whether we should incur revenue expenditure or not. But in case of capital expenditure, like for example, if I want to start a new factory, I have to incur now in 2025, I have to incur maybe 100 million US dollar. I have to incur the cost to it. But the benefit which I am going to get from this factory will be from 2026 to 2040 over the number of 14 or 15 years. Now, in capital expenditure, the time between I'm incurring a heavy expenditure and the benefit I am getting is quite prolonged. And when there is long time gap, then there is more risk and then there is more uncertainty as well. So when a company is deciding about the capital expenditure, there should be in an entity, there should be a proper system which evaluate those decisions. And those systems or that system is basically known as investment appraisal. So investment appraisal we use to evaluate investment opportunities which are in nature capital expenditure. Now, what is the main mechanism or how we will decide using the investment appraisal method? Dear student, as I told you earlier, the main factor to take decision in financial management is wealth maximization of shareholder. Now, in investment appraisal, I will obviously go for project if the cost is 100 and the inflows or the benefits are 120, 130 or 140. I will go for the project because doing that project, I will be creating the wealth for my shareholder. But where the cost of doing expenditure, the cost of doing business is more than the benefit we get from the business, then obviously we will not go for that project. That is the basis of investment appraisal, cost benefit analysis. And if you have more benefit than cost, then obviously we will go for the investment. And if we do not have sufficient benefit from the project, then obviously we will not go for the project. Now, in investment appraisal, we use various techniques to decide or to take decision that whether we should go for the project or we should not go for the project. Now, those techniques are of different categories. The first technique which we can use to evaluate is accounting rate of return method. Accounting rate of return method. This method is also known as ROI. ROI, return on investment. And the formula which we use in this method, accounting rate of return or ROI, is equal to average profits divided by average investment into 100, and we get the answer in terms of percentage. Average profits divided by average investment. And we get an accounting rate of return or return on investment. And the decision rule will be, if accounting rate of return is greater than target accounting rate of return, then we will go for the project. For example, if our accounting rate of return is 20% and target set by the management is 15%, then we will go for the project. We will do the project because the estimated rate of return is greater than the target rate of return set by the company. This accounting rate of return is also known as accounting rate of return of average investment. This is also known as accounting rate of return of average investment, because here we are dividing the average profit by average investment. Now, for example, how we will apply this methodology to a project? For that purpose, let's take a data. For example, we are evaluating an investment opportunity, and let's say the initial cost we need for the project, let's assume, is $200,000. This is our initial cost. Initial cost of the project, machine, asset, factory. And the residual value will be, let's say, $10,000. And we have projected that this will be a 4-year project. And in these 4 years, we estimate that the following profits will be generated. In year 1, we will generate 40,000. In year 2, we will generate 30,000. In year 3, we will generate 50,000. And in the last year, we will generate, let's say, Let's say we will generate 30,000. I have little space. Just come with that. Let me year 1, 2, 3, and 4. In year 1, 30,000. In year 2, let's say 40,000. In year 3, 50,000. And in year 4, let's say 45,000. So these are our projections. And the target accounting rate of return, targeted accounting rate of return set by the company, let's say, is 35%. That means if the ROI of this project, average ROI of this project is more than 35%, then we will go for the project. If not, then we will not take this project according to accounting rate of return. Now, let's apply it. First of all, we need average profit. Now, the average profits will be equals to 30 plus 40 plus 50 and plus 45,000, and we will divide it by 4. We will divide it by 4. So 30 plus 40, 70 plus 50, 140 and 45, 1,85,000 divided by 4. What will be the average? Can you tell me? Yes, students. 30,000 plus 40,000 plus 50,000 plus 45 divided by 4. It will be 41250. Now, the second thing we need is average investment. And formula of average investment is cost plus residual value divided by 2. And the cost of the project is 200,000 and residual value is 10,000 divided by 2. Answer will be 1,05,000. So the accounting rate of return will be 41250 average profit divided by average investment. So what will be the answer? Average profit divided by average investment. Average investment is initial cost plus residual value divided by 2. Residual value is also known as scrap value. This is also known as scrap value. So what is the answer? 41,250 divided by 1,05,000 into 100. Answer is 39%. Answer is 39%. And this 39% is greater than target accounting rate of return. Your target was 35%. And this proposed project is going to generate accounting rate of return more than 35%. So our decision will be that we should go with this project. According to accounting rate of return, we should invest in this project. The return of this project is more than the target set by the company. Any question? Yes, students, any question? Can you hear me?
Yeah.
You should kindly use this chat box. Kindly respond here. Communicate with this chat box. You got the concept about the accounting rate of return for investment appraisal. In accounting rate of return, we take average profits divided by average investment into 100. If accounting rate of return is greater than target, we will accept the project. We will do the project. Now, for example, our initial cost is 200,000, residual value is $10,000, and the project lifespan is 4 years. In first year, we will be having 30. In year two, we will be having 40,000. In year three, we will be having 50,000. And in year four, we will be having $45,000. Now, to calculate the average profit, we will sum the total profit of 4 years and divide it by 4, and we will get the average profit. And to get the average investment, we will take cost plus residual value. We will not deduct the residual value. We will plus the residual value and divide it by 2, and we will get the average investment. and then average profits divided by average investment, you got the accounting rate of return. And that accounting rate of return is greater than the target set by the company. So company should accept this project according to accounting rate of return. That is ROI, that is accounting rate of return, and that is how we use this method to calculate the ROI or accounting rate of return. Okay. Now, dear student, this accounting rate of return, which we have used here, is based on average investment. Is based on average investment. But there is an other way to calculate the accounting rate of return. And in that formula, we calculate the accounting rate of return taking average profits and divided by initial cost into 100 and you get the answer. And the rule will remain the same. If your calculated accounting rate of return is more than target set by the company, then we should accept the project. Then we should accept the project. But in this formula, we are using initial cost, not average investment. And in the exam, if nothing is mentioned, then by default, it will be an average method where we take the average investment. But if in question it is mentioned that we should calculate ARR using initial cost, then this formula should be used. Now, for example, let's say initial cost is 200,000 and residual value is $10,000. And these are the profitability of the project. And the project lifespan again 4 years. And the target is now 19%. Let's say in case of initial investment, our target is 19%. Now, in this case, again, in a solution, first of all, we need average profit. And average profit will be 30 plus 40 plus 50,000 and plus 45,000. And again divided by 4. And average will be 41,250. Average profit. Now you need accounting rate of return, average profit, average profit divided by initial cost. Now here we will use initial cost. In this method, we are calculating the accounting rate of return on initial cost. And initial cost is 200,000 into 100. What will be the answer? 21%. Answer is 21%. And this 21% is obviously greater than the target, which is 19%. So we will go with the project. Okay. So this is the accounting rate of return. The previous example was on average investment, and this was on initial cost. Okay. So this was the first method which the entity can use or may use to decide that whether the company should go for with the project or should not go with the project. Any questions, students? Any question? You got the concept? Any confusion? Can you hear me? Kindly respond. Can you hear me? Do you have any question? Okay. Look, we are on chapter number 3 of Study Hub, of ACCA Study Hub on chapter number 3. And on chapter number 3, we are discussing ROS. We are discussing ROS. It is also known as accounting rate of return or return on investment. Okay. It is accounting rate of return is also known as ROI, and it is also known as ROS, return on capital employed. We discussed the methodology. We discussed the formula, average profit divided by initial investment or average profit divided by average investment. Average investment is initial investment plus scrap value divided by 2. You did the calculation. Now we will discuss the advantages and disadvantages of accounting rate of return. The first advantage of this method is that this method is based on accounting information, and the accounting information is readily available information. You can access the accounting information easily. This is the first advantage. The second, the methodology of calculation is easy to understand. And this methodology is usually used by the financial analyst to appraise the performance. This formula is widely used and everyone understands the meaning of ROI, ROS, accounting rate of return. So these are some advantages of this methodology. But it also has some disadvantages. The first disadvantage, different methods of calculation. As we discussed, it can be calculated on the basis of average investment, and it can also calculated using the initial investment. So different method of calculation can create a confusion. The second disadvantage, this method is based on accounting profits. It's based on accounting profits. And accounting profits are subject to accounting policies and accounting estimates. Means easy to manipulate. And accounting profits ignores the time value for money. Basically, in 2025, I'm incurring the capital expenditure. And after year 1, year 2, I will get certain returns. And those are future values. And when I am comparing those future returns with 2025 cost, then those future values should be translated or converted into present value. But the accounting rate of return does not incorporate the time value for money. That is a disadvantage. Another disadvantage is that it is not a cash-based method. It is also a disadvantage. Accounting rate of return is not a cash-based method. It is an accounting profit-based method. Now, why it is disadvantage? Dear student, basically, when I am incurring cost today, I'm incurring $200,000. That $200,000 is in a form of cash. And I'm comparing the cash investment with the future profitabilities. And you know, the profits doesn't mean that you also have a cash flow. So I'm comparing the initial investment, which is in a form of cash, with the accounting profits relating to future. So in between cash and accounting profitability, there is no comparison. So not having this method in a cash flow will create a disadvantage. Other disadvantage is that the target set by the management is subjective. The target will be set by the management, and management can manipulate with the setting of the target. And last disadvantage, accounting rate of return is a relative answer. Means it give answer in percentage. Now, for example, now how this create a disadvantage? Let's say you have two projects, project A and project B. The project A cost is 1,000 and project B cost is 1 lakh. And the return of project A is 100 and return of project B is 8,000. Now, if you calculate the return of project A will be 10%, but return of project B will be 8%. Now, if I ask you which project is better, you may answer that project A is better because their percentage of return is better than the percentage return of B. But this thing will ignore the size of the investment. Basically, if you compare the size of return, the size of return B is far greater than the size of return of project A. Project A is generating only $100 and project B is generating $8,000. So I mean to say that percentage is itself is not answer unless you relate that percentage to some base. 10%. But 10% of what? 10% of 1,000? Oh, that means you are generating only $100. 8%. Okay. But 8% of what? 8% of $100,000. Okay, I am generating $8,000. Far better than $100. Now, this thing is ignored in a percentage. That's why it is known as relative measure. And it is a disadvantage. The relative measure does not consider the shareholder wealth, but the absolute size of $8,000 and $100 will consider the shareholder wealth maximization. Got it? Any question? Yes, students. Any question? You got the concept? Okay. Okay, students. We have started the first chapter, which is chapter number 3, investment decisions. And in investment decision, we have discussed completely accounting rate of return, 3.3 topic. Okay. And we also covered 3.1, decision-making process. Decision-making process and ROS, accounting rate of return. These two areas we have completed. You all people have access to Study Hub. Kindly revise these topics. Now, in the next class, we will discuss the other methodology. And one of those methodology is payback period. So we will take start from the payback period from the next class. This is the first class, and I think it is sufficient for this class. I try to absorb it. Now, in the next class, we will talk about further techniques on investment appraisal. We will complete the chapter 3, and we will continue with the other areas of investment appraisal. Okay. So it's good to have you people in the class. Hopefully, you got the concept and you learned something today. So best of luck and see you next week on same time. So thank you very much and goodbye and take care.